All right, welcome to Money Never Sleeps. This is the show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And what a world we're in now. You've seen it, especially this past week. Everyone's talking about it. You have the local media, the national media, the international media. You have, your neighbor, your grandma. Everyone's talking about what's been happening with everything from Robinhood to Gamestop to Bed Bath and Beyond to AMC and all these stocks and all this stuff that's happening and Reddit. You have people that never knew what Reddit was. Now they know what it is. I want to crank it back. All right, because what's happening now is really giving me a flashback of things that happened in the past. And people need to understand this. Years ago, you had platforms that people they would go and chat. You had message boards, things of that nature. You had AOL. You had the Silicon Investor. People would go there and tout stocks and stuff like that. That was the social media of the day. Now everything's more, of course, more advanced. You have the Facebooks, the Twitters, the Snapchats, the TikToks, and the Reddits and all types of social media that's going on. And it just is, it's interesting. Back then, you would go post things and you can go tout a stock and really talk, whatever. You had stock promoters out there promoting everything from pink sheet pieces of garbage to other companies and pushing it and getting it in front of people. They were going in, they were being induced to trade. They were being induced to invest. Okay, by a stock promoter or someone of that nature. Now, back then, sure, I'm sure you had institutions doing stuff too. The short sellers, they've been around for a long time. Okay, we've seen, even talk about Money Never Sleeps, talk about, reality with Lehman Brothers and when that happened, Bear Stearns, when all this stuff was transpiring, and these big monstrosity of companies that, that had buildings that were worth more than the company at the end of the day, and they were forced to shut their doors because they were shorted to hell. You had companies that went down to nothing, Okay, and that's okay. No one went knocking on anyone's door for that. No one went and said, "Hey, this is what you induce selling of this, or you short sold this," and so on and so forth. So now coming to present day, and what's happened this week with GameStop and all these issues that were going through the roof. They had short positions of anywhere from 50 to 75. GameStop, I think it was 265%. AMC, I think 170%. You had Lagard Pharma, that was also somewhere north of 109%. The short interest, and it's crazy that the shorts are able to do that. That's legal. That's perfectly legal, right? For them to do that. They're shorting more stock that's out there. How do you borrow? You have DTC. You have to be able to borrow this stock to short it. So I'm assuming that you got options and stuff like that involved here. But still, how are you shorting more than what's out there? All right, that's something that should be looked at. First of all, second of all, okay, when people, I'm talking, and this is what they say. Regular people were going in there. They were going on Reddit. They were talking about it. It started to trend, and all of a sudden, boom. Okay, these stocks started going through the roof. Now, is that just the retail investor? No. Okay, there's something more going on there that kind of blows my mind. The thing that pisses me off a bit is that you have retail investors, little investors that they may have 50, 100, couple hundred grand in the market, and they're going and they're jumping into these positions, not knowing, because they see the excitement. It's like Vegas. They're rolling the dice and they're going in. They see the movement. They get excited. It's like the movie Boiler Room. You get excited. You hear all the noise. You're like, I got to get in. So this is what they do. Okay, so they're being induced to buy this stuff. Now, is it by other retail investors? I'm going to say no. I'm going to say there's something more going on there for something like that to happen, because you can take all these retail investors that are on, a Reddit, Okay, they're not equating to the billions of dollars that were transpiring. That they know the of value that was built up in these positions. So there's something more there. And who's doing what and why, I don't know. The thing that kind of bugs me, that pisses me off the most, people, is that when you have a position in this, you're a retail investor, you buy it, things don't go the right, maybe it's going the right way, you want to cash out, boom, then you have Robinhood, you have other institutions that go and say, you can't sell it, you can't buy it, you can't do anything. What happens? You're stuck. Even there was a Cash App that also did the same thing. So the one thing that I don't understand is that it's okay when big players do this, okay, and you may have a halt on the stock temporarily, but they're still moving stuff. But the little guy, his only resource to sell is through a brokerage firm. He's not dealing with the traders on the floor. He's not dealing with any of that. So what happens to them when the floor comes out from underneath them and stocks come out, like GameStop today? All these stocks, they got a haircut of about what? 50%. Some went down by half, more than that. Okay, and these poor people that are stuck, they're trying to get out, they can't get out, and they wind up being stuck. Okay, and I think that's the horror of everything. And there has to be protocols in place that prevent that from happening, because at the end of the day, you can't, you can't go and say, all right, institutions, you do whatever you want. You're a hedge fund, you're a private equity firm, whatever it is, you can do what you want, but you're a retail investor. Guess what? We're gonna rein you in when we want to. Okay, you can't work that way. Can't work that way. The retail investors have been out of play, so they say, for some time. So now they come into play, and that's not good. So they say. Okay, so now you have the institutions that, I guess, they were doing whatever they were doing. You even had the Winklevoss twins talking about some things, and not some. They were talking, and they were saying that, hey, what is Robinhood's role in this and stuff like that. Yeah, you don't know. You don't know. No one knows what happened. Okay, especially if they're on Telegram or something, or they're using, encrypted messaging and these messages disappear. How do you know? You don't. You don't. So what do? I'm sure that the SEC is going to investigate and see what's going on. What's going to come out of it? Who knows? I don't know. All I know is that the firms, the brokerage firms, the BDs out there that went and they halted, they prevented people from buying and selling, from trading these because of all the stuff. That's where you have a problem. Okay, because if you're going to stop one, you stop them all across the board. Halt trading in totality. But don't stop retail investors from trying to get the hell out, or try with them trading it. But meanwhile, other firms are allowing the hedge funds and other big players to go trade in and out, trade options, everything else. How fair is that? It's not fair. It's not fair. Keep it fair so people, they're in it. They're in it. If there's a situation that comes about that they halt the stock, that is it. It's pause for everyone, right? That happened, and maybe they halted once or twice, but then these firms, they prevented these retail investors. And now look, do I have sympathy if you lost money? No, I don't. If you went in with open eyes, you know what's going on. What I do have sympathy for is when you get in and your brokerage firm says you cannot sell or buy, you're stuck. What do? You want to get out. The thing's at 400. You want to get out. At 375, you want to get out. 350, you can't. 325, you can't. 300, you can't. 250, you can't. And what do? You have to sit and wait. Now, are these things going to keep trading up and down? Well, I don't know. We'll see what happens. The value of the company, the price. We have to do your research. The fundamentals, if they're there for it, great. If not, who knows? Who knows? But I guess we're going to see what's going to happen. This is an ever, developing situation that's going to continue to go. Anyway, I don't want to talk about that for the whole show. I also want to talk about cryptocurrency, because, you have a lot of things going on there. And it kind of correlates to what happened here, because with cryptocurrency, Granted, ICOs, things like that, they're bad because you're circumventing the law, as far as going and doing this stuff. Now, if you have cryptocurrencies and your people, they would go on Telegram and do this stuff and go and tout these cryptos, go on Twitter and tout them, and immediately, boom, the hammer would come down. They would get fines and everything, from celebrities to rap stars, everything else. They would get fined for this, and because they're not supposed to do that. But again, what about the people that did it with this? That did it on Reddit. They did it on Reddit, and this is what happened. So now, what's going to come down there? See, you can't be one-sided. You can't say, hey, if you go and you promote it on Twitter, then we're going to slap you. But you can go and write a whole big article on Reddit, and it's okay. Or you can go promote it on Facebook, but you can't promote it here. And this is why a big thing with decentralization comes into play, because, people want to be in control of what they're doing. They don't want a big brother telling you, hey, you can't write this, you can't do this, and can't do this. You know what? I mean, they're feeling like it's turning into communism. Okay, you can't stifle the people. So, that's why decentralization and cryptocurrency is all the rage, because people want to be in control of what they're doing. They want to be in control of it. They want to be in control of their money, of their resources, and things of that nature. They don't want the government telling them what to do. Okay, and cryptocurrency, the utility of it, Bitcoin is, wasn't the first. Keep in mind, wasn't the first, but is the most successful, and it's been embraced. And, look, the thing was at pennies, and now 30, 40,000 going back up. Once this whole, right now with what's happening with this Robinhood and everything else, I'm telling you that the people that are promoting cryptocurrency and everything, they have a leg to stand on as far as arguing the point that, hey, why can't we talk about this? But you were able to talk about Gamestop and take it up 400, 1,500%, whatever it was. You're able to do that, but we can't go and talk about something that we're passionate about, okay, without it being seen as promotion. Granted, some people are promoting it, some people are talking about it. Whatever it is, you get information out there. So anyway, so it brings the argument of decentralization. I believe that there's going to be a balance. Centralized cryptos that have a utility, that's always a good thing, as long as there's transparency. When you're talking about decentralized situations, this is when it gets interesting, because people want the benefit of what's there. However, okay, they want things to happen. But this, in a decentralized situation, you don't have a CEO. You don't have someone at the helm saying, hey, this is our responsibility. We can change this and make this better. You're dependent on the people to do this. And what winds up happening, you can have a bad actor in there, and all of a sudden, boom, everything goes the wrong way, and it can screw up a project in a hurry. So, there's going to be balance. You're going to have governments that are going to go and embrace crypto at some point in time, but a centralized one where they can just keep everything digital, is making everything digital. And we're going to get there. We're in a digital economy. It's going to continue to roll that way. Right now, how many of you have money in your pocket, change in your pocket? You don't. You have your credit card, you have PayPal, you're doing stuff like that. You have other sources of doing stuff, of moving money. But, with cryptocurrency, is different. You're not getting raked with fees and all this other stuff that come along with dealing with a traditional bank, no matter where it is in the world. You have fees associated with. That's why they have the big buildings and the nice chairs, and everybody's, getting paid well. They don't make money from nothing. Banks make money. They make a lot of money. So the people, they're looking for something. Okay, and I think that it'll come to a point that you'll have certain cryptocurrencies that'll be embraced, in general, as long as they have a utility. We're going to see it happen. And again, decentralized, there's a place for it. Centralized, there's a place for it. I'm not on either end of the fence. I'm right there, because I know there has to be a hybrid of it. There has to be. You can't be on one side, can't be on the other. I'm kind of independent. I'm in the middle, and I'm seeing things for what they are. Okay, because in this digital economy, as things go on in the next year or two, from digital document management to smart cities to people in the middle of nowhere that are in the bush. They're going to have internet connectivity. Big players are making that possible. You have Elon Musk shooting rockets up in the sky like crazy. You think that that's not going to go and bring some internet connectivity into different parts of the world? Of course it is. Of course, I don't know how we're going to see the sun, but it's going to bring connectivity, right? So all this stuff is transpiring. So you're going to have people that'll have access to their mobile phones and having, secure and basically, stronger internet connections. You're going to have a lot of stuff going on there. So I think that there are a lot of things that are yet to be done. But going and just thinking that, all right, if it's decentralized, that's the way to go. Can't think that way. There has to be a hybrid of the two. Bitcoin's not going anywhere, so but if you're looking at these type of scenarios, look for things that have a utility. A lot of growth potential there. A lot of growth potential. And now, let's go back into, what's going on in general in the world, with the pandemic, everything that's going on. Everything's in flux. Everything's in flux. The thing that concerns me is education. People need to be educated. UCLA, they got the biggest jump in admissions. I think it jumped like 148%. The LA Times had it, and I think 48% of that were African Americans, and I said that's fantastic. Kids want to get educated. You need to be because without an education, what winds up happening, people, I mean, if you don't have an education, you can't get a good job, you can't have a career, you can't do certain things. Now, granted, can you go and start a business, do that stuff? Sure. But I'm saying just overall picture, you need to have an education. Now, does it have to be traditional university? No, but be educated in something. So I just like the fact that more people were applying for college. They're looking for something else. Hopefully they're not going to become lawyers. There's enough lawyers out there, but I'm just saying, there's an that gives you hope for tomorrow. When you have these young people that are going to school and they want more out of their lives. So that's a good thing. It's positive. Anyway, so what I covered today is just, things that have been on my mind. And all this stuff is impacting the markets, but the thing is too, is that this situation with Robinhood and everything, it is separate from the market because none of these companies have an intrinsic impact on the Dow or the S&P or things of that nature. This is what's interesting. Now, these stocks went up, the market went down. These stocks came down, the market went up. So what's happening? Money's circulating. So all that's telling me is that you don't have enough retail investors out there to cause that kind of fluctuation. Okay, all it tells me, institutions are involved in this. What institutions? I don't know. I'm going to say hedge funds, specialty hedge funds that are doing the do. They're making this stuff happen, and it'll come out in the wash at some point, But anyway, guys, just when you're looking on a retail end, you're looking at these companies. If you're a trader, great. You go in, you roll the dice, you make things happen, trade your options, stuff like that. Nothing wrong with that. And even the traders, smaller traders that had their position somewhere, they got stuck. They couldn't get out. So trading's not a bad thing. You see what's going on. You're day trading, you're minute trading, whatever it is, you're getting in and getting out. That's okay to do. Okay. But for those that aren't traders, those that are investors that liquidated something to go into something else and do all this stuff, this is where the problem lies. So you just got to be careful. I know you're looking for the quick buck, or you're looking for the opportunity that comes around once in a while. And I understand it. I just think that them stopping the trading is problematic. Anyway, we'll see what happens. We'll see what happens. All right. I want to thank you guys for listening to my rant, and I'll be back with you again for another episode of Money Never Sleeps. Until then, be safe and just be safe in the market, be safe in general, and have yourself a great rest of the week. Take care.